latest assessment of the economy by the Federal Reserve confirms the economy is weakened. The Federal Open Market Committee cites a worsening job market, household spending that is flattened, and depressed housing, all as factors holding back the economy. Rather than stay the course with its previous language, a promise to keep interest rates low for an extended period, the Fed now gives a hard date of mid-2013. Wall Street was quick to respond, briefly turning negative before shooting higher by the closing bell.
The markets don't seem to like it very much. Basically, I think it's a minor mistake, because the market already knew that interest rates were going to have to be low for an extended period of time. The Fed's been saying that. We knew that. With the economy this week, nobody thinks the Fed's going to raise rates.
Keeping rates low has been the Fed's primary tool to stimulate the economy. But apart from that, it has few options available for the future. It could have announced a new bond purchase program, a policy known as quantitative easing, aimed at stimulating the economy. It could have stopped paying interest on accounts on deposit at the Fed. But in this case, staying the course with a slight modification was the option of choice.
Well, this is the problem, that the economy is doing very badly. The financial markets are unraveling. We have this Fed meeting in the middle of this turmoil, and everybody expects the Fed's going to do something. But if you listen to the rhetoric beforehand and all the things that the people said that the Fed could say, these are really third, fourth order sorts of things that the Fed might have done. So I think that we're sort of set up for disappointment.
Wall Street didn't let the Fed statement hold it back. Shortly after the reversal, the Dow quickly turned positive again, ending the session up 430 points at 11,240. That helped erase much of Monday's 634-point drop. Volatility in the markets is reflected in an index known as the VIX. At mid-session Tuesday, the VIX stood at 48.
The global business climate is very concerned about the current level of volatility. And a 48 level on the VIX, which is where the market closed on Monday, reflects an expectation that the VIX will be, that the S&P 500 will be moving 3% on a daily basis.
The S&P finished the session up 53 points, nearly 5% higher at 1,173. The Nasdaq shot up more than 5% to 2,483. Volatile times for the markets indeed. Mark Hamrick, Associated Press.